Top S&P 500 companies. A deep dive into market power. Introduction. Welcome to Muscular Brain Fat Wallet, where we combine financial intelligence and personal growth to help you build a stronger mindset and a wealthier future. Today, we're diving deep into the powerhouse that drives the U.S. economy, the S&P 500. The S&P 500 is a fundamental benchmark that drives the heartbeat of the U.S. stock market. It's not just a list of 500 companies. It's a barometer of economic health, a reflection of corporate performance, and a guide for investors worldwide. In this video, we'll explore the dynamics of the S&P 500, how it functions, why it's so critical, and the key factors driving its performance. By understanding the S&P 500, you gain insight into the global economy and how to make smart decisions that lead to financial growth and success. Section 1. What is the S&P 500? The S&P 500, short for the Standard & Poor's 500, is an index that tracks the performance of the 500 largest publicly traded companies in the U.S. by market capitalization. The companies included in this index represent a diverse range of sectors, from technology to healthcare to consumer goods. It provides a comprehensive view of the American stock market and its overall economic health. Unlike other indices, the S&P 500 is market cap weighted, meaning that the larger a company is in terms of its market value, the more it influences the index's movement. When one of these massive companies like Apple or Microsoft has a good day in the market, it can push the entire index up. Conversely, when these companies stumble, the index can feel the shock. Section 2. The economic importance of the S&P 500. The companies within the S&P 500 contribute about 80% of the total U.S. stock market value. But their influence goes beyond the stock market. These are the corporations that shape industries, drive innovation, and influence international markets. Their products and services impact the lives of millions, from the phones we use to the medicines we take and the technology that powers businesses worldwide. The S&P 500 is also used by economists, analysts, and investors to gauge the state of the U.S. economy. When the S&P 500 is thriving, it's a sign of economic health. When it's struggling, it's often a reflection of broader economic challenges, such as recessions, inflation, or market volatility. Section 3. How the S&P 500 is calculated. The index is market cap weighted, meaning the larger a company's market capitalization, the bigger its influence on the index's performance. For example, tech giants like Apple, Microsoft, and Amazon hold the most weight because they are some of the largest companies in the world by market value. Here's how it works. 1. Market capitalization equals stock price x number of outstanding shares. 1. The larger a company's market cap, the more it affects the movement of the S&P 500 index. 1. This is why shifts in stock prices of these big companies can cause ripples through the entire index. Changes in the S&P 500 can be driven by 1. Company performance. Strong earnings reports push the index up, while weaker than expected performance brings it down. 2. Sector performance. A booming technology sector can offset underperformance in energy, consumer staples, or industrials. 3. Macroeconomic factors. Inflation rates, Federal Reserve policies, interest rates, and global events can all influence the index's performance. Section 4. Sectors that dominate the S&P 500. The S&P 500 is composed of companies from a wide variety of sectors, but not all sectors are weighted equally. Let's break down the major players. Technology. This is the most influential sector in the S&P 500, representing companies that produce software, hardware, and cloud computing services. Think of innovations in AI, cybersecurity, and digital transformation. Tech companies often lead market growth and have a strong influence over the index. Healthcare. Healthcare companies in the S&P 500 span pharmaceuticals, biotechnology, medical devices, and healthcare services. This sector sees steady demand as it directly addresses global health challenges and aging populations. Financials. Financial companies, including banks, insurance firms, and asset managers, play a crucial role in the index. They are sensitive to interest rates, regulatory changes, and economic growth, impacting lending, investment strategies, and market liquidity. Consumer discretionary and staples. These sectors include companies that make consumer products ranging from food and beverages to luxury goods. Consumer behavior, economic cycles, and disposable income levels heavily influence this sector. Industrials, energy, and utilities. These are vital sectors that contribute to infrastructure, energy production, and essential services, particularly in times of global economic shifts and energy transitions. Section 5. The performance of the S&P 500 over time. The S&P 500 has historically delivered strong returns, averaging about 8 to 10% annually over the long term. While there have been market corrections, recessions, and periods of volatility, the S&P 500 has consistently rebounded and provided substantial growth for investors. Major historical trends. 1. Dot-com boom and bust. 1990s, early 2000s. Tech stocks soared in the 90s, but the bubble burst in 2000, causing a significant market downturn. 2. Global financial crisis. 2008. The housing market collapse led to a severe financial crisis, but the S&P 500 recovered by 2013, reaching new highs. 3. Pandemic recovery. 2020. COVID-19 caused a sharp market decline, but the S&P 500 experienced a rapid recovery, fueled by massive stimulus packages and a surge in technology stocks. Section 6. Why investors flock to the S&P 500. For both beginner and seasoned investors, the S&P 500 represents a safe and reliable investment. The index provides exposure to well-established, highly profitable companies with a track record of success. These companies have diversified business models, meaning they can adapt to changes in the economy, new technologies, and consumer trends. Investing in the S&P 500 is often seen as a low-risk way to participate in the stock market's growth. It's used as a benchmark for most mutual funds, ETFs, and retirement accounts, offering stability even during uncertain economic times. Key reasons why investors are drawn to the S&P 500. 1. Diversity. The index spans multiple industries and sectors, offering a well-rounded portfolio of leading companies. 2. Market representation. It represents the best of corporate America, giving exposure to companies with strong financial health. 3. Long-term growth. Historically, the S&P 500 has delivered consistent long-term returns, making it a solid choice for retirement and wealth-building strategies. Section 7. S&P 500 in the global economy. Although the S&P 500 tracks American companies, its influence reaches beyond U.S. borders. Many of the companies in the index have global operations and customers, meaning their success or failure can have a ripple effect across the world. For example, when tech companies grow, it often benefits software engineers, hardware manufacturers, and consumers globally. The S&P 500 also has a significant impact on global investment markets. As the U.S. market grows, foreign investors often look to the S&P 500 for growth opportunities. It serves as a safe haven investment, particularly in times of global economic uncertainty. Section 8. Future trends in the S&P 500. The S&P 500 will continue to evolve as new companies rise to prominence and sectors shift in importance. The next wave of growth is likely to come from emerging technologies, green energy, and biotech innovations. Companies investing in artificial intelligence, automation, and sustainable solutions will likely shape the future of the index. At the same time, geopolitical risks, inflation, and regulatory challenges could create hurdles for certain sectors. The companies that adapt to these challenges will define the next chapter in the S&P 500 story. Conclusion. The S&P 500 is more than just an index. It's a guide to the U.S. and global economy. By understanding the sectors, market trends, and economic forces that shape the index, investors can make smarter decisions and unlock pathways to financial success. Whether you're a seasoned investor or just starting, the S&P 500 offers valuable insights into market dynamics, industry leaders, and future growth opportunities. As always, stay informed, stay ahead, and continue building that muscular brain fat wallet.